Alrighty, good morning, everyone. Happy Friday, May 3rd, 2024, and welcome to a special complimentary live trading session. So happy to have you here as we start our day, actually ending the week and recapping everything that's happened this past week. As we all know and saw, a lot of that volatility came with the FOMC announcement on Wednesday. A lot of movement that we saw as far as big moves to the upside, big moves back down. So we want to understand where and why price changes direction and how to find those key turning points in the markets. I've told people and students time and time again, it all needs to be simplified in a way that we can really understand where those high probability buy and sell opportunities are. Once you can read a daily time frame, that is going to make your trading that much simpler moving forward, even for the day traders. So keep that in mind. I'm going to be honing in on that during today's session and how we can understand and visualize the price charts on the daily time frame to then help us with our day trading during these live trading sessions. So let's start off with our prep screen. Again, welcome everyone. If you just joined the room, feel free to type in the chat so that I know you're here. And if you have any questions at all, feel free to let me know. So the trading tip of the day, Kate's 2-candle flip can be used to anticipate 3 things: breakout trades, zone entries, and trend direction. All of those things in one that can be used with the 2-candle flip. So it seems pretty helpful, but overall, we want to use that on the higher time frames, the daily time frame. What I like about Thinkorswim is that you can adjust the time frame to not only a daily, weekly, monthly, but you can also adjust it to a 2-day, a 3-day, a 4-day, whatever gives you the best picture of the 2-candle flip. You want to go with that one and look for your trades based off that. So again, 3 things that the 2-candle flip can do is that it can help us anticipate breakout trades, zone entries, and trend direction. Simplify your trading using the 2-candle flip. And then question for you guys in the room, who caught the 30-year bonds setup? Now, this is one that we briefly discussed in our live trading session, but we've already had a 0.8% move to the upside. Now, that is huge on bonds, which is also why I'm putting it as our spotlight trade. Let's jump out to bonds for one moment, take a look at it. And again, starting off on the daily time frame. All right, so 30-year bonds, let's zoom in, take a look at what was setting up for us last night. Now, did anyone take the bonds trade? Not something that I typically look at in the live trading sessions, but for me, whichever products have the best setups, you want to go with those ones. It's not, useful and time efficient to be focused on so many different charts and being overwhelmed by the different price patterns, different time frames, when you can find one that really has that ideal setup. Now, take a look at this. This is one that's been setting up for a couple days now, but if we zoom in here, taking a deeper dive into bonds, back on, this was April 25th, April 26th. This was one that we did, I think it was our spotlight trade in the live trading session. We had a red candle coming down, green candle closing within the range of the red candle. When you isolate that, that is your 2-candle flip. When you find the 2-candle flip that says, hey, look for a potential reversal in the market, which then led to the next day's move to the upside on the 29th. So 2-candle flip, red candle followed by a green candle. And then the next day we had a huge move to the upside from 113.30 all the way went up to 114.24. So again, a huge move to the upside on bonds, all starting with the 2-candle flip. Now, who can tell me, who's familiar with previous classes, live trading sessions, well, what's the odds enhancer for the location of this 2-candle flip? Where is this 2-candle flip located that makes this higher probability versus putting it maybe in other locations? Who can take a guess at that? Type it in the chat if you know. Hey, KK. Hey, Bran. See, low on curve, absolutely. So that's a good one. So you can see we're coming down, but that may not be enough to say look to go long, because if you notice over here, a little bit further to the left, we may have said, well, this was located low on the curve, but then we continue to move lower. So it's not about picking bottoms per se. Hey, Mark, good to have you back. Below support. You see what Mark said? Fake out, breakout. Good job, Dwayne. Yeah. So what we're looking at is we want to look left and notice location. Location is key so that we're not just finding any two candle flip in any location, because when we look left, we can find a bunch of them, right? Let's circle some of them. Here's a two candle flip. This one failed. Let's see, here was a two candle flip. The next day rallied a little bit and then pulled back. So that one really wasn't a good one. Let's see. Yeah, so those ones didn't work out. So again, it's not enough just to be low on the curve, but location is critical. Mark nailed it. Dwayne nailed it as well. It's all about location and looking for ones that are located below support. So to find that, look left. You can see we have a support level here. We can see that visually because there's the wicks touching the support level. Price breaks down, immediately forms the two candle flip, which then leads to this next momentum wave to the upside. Hey, Michael, let's see. When you say two candle flip, do you mean anytime you see an opposing color candle? Yes, yeah, that's pretty much it. So you just want to see red candle followed by a green candle, and you want the flip candle or the second one to close within the range of the first candle. So yeah, opposite direction or opposite color candles, just red and green, indicates looking to go long. But again, that's not enough. We want to make sure that it's located below support or above resistance. Awesome, great question, Michael. So we had that two candle flip, big move to the upside. And then May 1st happened. You can see we formed another two candle flip. That one was kind of pushing into this lower two candle flip. So we have one on top of another. Yesterday, if you were watching bonds as the market was opening, we were getting ready to get that push to the upside, but ultimately now we're up 0.73%, looking for that momentum and push to continue to the upside. So again, those two candle flips really show you where most of the buyers and sellers are. When you see them, you want to use that as your indicator for trend direction and looking for the next moves to the upside. So excited to show that one today. Let's go back to our prep screen. So again, how we use that just right now on bonds and not even going down to the smaller time frames is that we found breakout trades, because after the two candle flip, you can see we started getting those long breakout trades to the upside. Zone entries, because once we identify a two candle flip, we can use it as a zone entry when price comes back down to it to look for additional long trade opportunities. And then lastly, it helps us gauge trend direction, because that's saying once you see the two candle flip, you're looking for momentum to the upside, which would be an uptrend. And simplify your trading. All of this can be seen and visualized on the daily timeframes and up. I know a lot of the day traders out there, they like the smaller timeframes, but I always want to pull you out a little bit to look at the daily chart, just so you can see if your day trades are on the larger time frame trend, so you can stay in those day trades longer. So again, huge moves to the upside on bonds. Let's see what else we got on our prep screen. So jobs report, April data forecast to show hiring slowdown to 5 months low. That didn't stop the markets though. We got a pretty significant move to the upside on these equity indexes coming out to the daily time frame using the S&P. Notice this huge move to the upside that we've already had on the S&P daily chart, up over 1% at this point. So I think someone mentioned this before, sometimes you see what goes on in the news, it may be bearish and we think, well, we need to be shorting the markets. If we're having bad news, the market's going to drop. Not necessarily, and quite the contrary. I almost always see the opposite happen, where bad news leads to moves to the upside in the markets, or good news leads to pullbacks. But 2 days ago, back on May 1st, notice how we had that drop, price came down, formed a 2-candle flip, and then ultimately we got this next move to the upside. Now we're going to talk about that one in the next couple of slides, just help you visualize where we're looking for those long and short trade opportunities. A couple of more economic reports coming out for today's session. We'll have PMI composite final at 9:45. ISM Services Index at 10 a.m. Eastern, and then Fed Chairman speaking at 10:30 and 7:45. Bonds, we've covered that one, and looking for our long trades. In the equity indexes, with these moves to the upside, we're looking for long trades to stay with the trend. To recap some of the highlights from this week that we've gone over is incorporating the 2-candle flip with the wiki areas to show trend direction. Wiki areas, a lot of you guys know about this, is where those areas where we see strong wicks pushing price can give us an indication as far as where the markets are going. So crude oil, we were looking at that short trade back on the 29th. Selling pressure, we got that short trade on crude oil. We got a long trade on the S&P with the 2-candle flip, and then copper as well. We went short on that one with the 2-candle flip for the breakdown. Again, finding the 2-candle flip, even on the smaller time frames, 10-minute, 20-minute, 1 hour, can help you gauge what direction you should be trading. We put all the pieces together. I was so excited about this one. I think Patrick got this one on the Russell, a couple other students in the live trading sessions, but amazing how we can put the pieces together to find some of these amazing trade opportunities. Russell, daily chart, we had a resistance level. Price broke above it. If you were in live trading, you remember me saying, we got that pop up. This is setting up for a potential reversal if we break below the low wick of that green candle. Putting together all those other pieces, we have a controlling breakout pivot to the left, wiki area, resistance led to a fake out breakout. Then we got our wick over wick reversal. Again, all of this just staying on the daily time frame can help you stay in trades longer, find those high probability entries, and not get lost in the smaller time frames. After that move down, we had a 2-candle flip, red candle coming down, green candle closed within the range of the red candle. And then again, today we've been having a huge move to the upside on all the equity indexes, but especially Russell getting that breakout to the upside. Now I wrote down here, Kate's 2-candle flip was here, red and green, candles of the opposite colors. Now, who can tell me what the odds enhancer was for this 2-candle flip here to look to go long the next day and today? Who can tell me what's the odds enhancer with this 2-candle flip that led to the move to the upside? Let's see, wick over wick. No, not really seeing a wick over wick. So the odds enhancer we talked about before was when it was located below support, which this one isn't the case. This one's actually located, notice where that 2-candle flip dropped into, it's located in, what do we call all those wicks? Good job, Dwayne. See this wick coming down here, this long wick here, price dropped into it there. Yes. Who knows those wiki areas? Let's just step back and look at this picture. Wick coming down, huge wick here. wicks here, plus a 2-candle flip. This is becoming our wicky area. Not to mention, if we look left a little bit further, we've got a 2-candle flip over here. 2-candle flip, wicky area, move to the upside. Again, that should be giving you the bias the next day as you're trading to say, let me look to go long as price drops into those wick areas. Great job, Dwayne. And then ultimately getting and boiling down to your entry point is that ultimately we need to find an entry. A lot of us aren't comfortable taking daily setups or daily entries. You don't have to go down to the smaller time frames, 5 minute, 10, 15, or if you like the higher time frames, you can do the hour, 4 hour. But ultimately, you want to gauge trend direction, use the 2-candle flip and wick areas as your odds enhancers. And then as you go down in time frame, look at how the futures market opens at 6 p.m. Eastern. You may have noticed on May 1st, Wednesday, we gapped up a little bit. That gap up leads us to indicate that the trend is continuing to the upside. At that point, go long on a breakout to the upside, but you want to get in sooner rather than later to trade with the gap. I'm going to zoom in over here just to show you. It was a little bit clearer on some of the other equity indexes, but right on this green candle in the red circle, notice how we gapped up from the prior close. And that gapped up is saying buyers are in control, look to go long. We want to get in long at that point so we don't miss the entire move to the upside. Crude oil, another amazing example. Was so happy with this one as we set up for some of our short trades in the live trading room this week. Top of a move, got our 2-candle flip, green followed by a red candle, and then ultimately trading with that momentum to the downside means you're looking for short trades. Now, who can tell me this 2-candle flip here, what was the odds enhancer to go short on that 2-candle flip? Green and red, 2-candle flip. What was the odds enhancer to go short based on this daily 2-candle flip? Awesome job, Mark. Yeah, pay attention to what Mark's saying. He's been doing a tremendous job doing the swing trading side of things and looking at the higher time frames and really honing in on how much information you can get from the higher time frames to incorporate into your trading. But look at this huge wick here. This is a tremendous amount of selling pressure coming down, price setting up with a 2-candle flip in a huge wick just says, hey, sellers are still in control. Don't look to pick bottoms. That's where we get stopped out. We want to trade with the trend to the downside. And then as the markets pulled back day after day, what was the entry to continue to go short? After you have a 2-candle flip to stay with that reversal, what is your entry to go short? Where are you getting confirmation that the trend is continuing to the downside on each of these days? Nice job, James. So proud of you guys. See those wick over wicks that are forming? Once you have that red candle low, let me zoom in again. Once you see this, well, actually this, that says 2-candle flip, look to go short. Okay, done, just had a huge move on crude oil. Well, now remember, we're not looking to pick bottoms. This is where a lot of people start looking here and they say, well, maybe I should buy here. This is a wicky area. But you don't want to do that. You want to trade in the direction of the 2-candle flip, which means going short below the wick over wick. Staying with the trend to the downside. Again, continuing, anticipating that a lot of people are probably picking bottoms here. To stay with the trend, we want to look for those breakdown continuations. All right, and then before I go out to just a couple of testimonials from some students over the past couple of weeks, let's go back to our prep screen, and that's going to lead into our May specials. But let's go to the charts now and see what we've got for a day. Again, a lot of analysis that I do on the higher time frames to prep for the trading day, because again, we're already up 1% on the S&P and many of these other equity indexes. So we want to get in those trades ahead of time when we're only up maybe 0.1% or quarter of a percent, so we can take advantage of these huge moves. S&P, 2-candle flip, came right down into our wiki area down here. Dwayne did a great job visualizing that and using that to gauge trend direction. So once you see that, again, trend is to the upside. We're not looking to pick tops. We're looking to trade in the trend direction. So at this point, the markets are moving higher. Let's see where we're at. So we broke above this resistance just by a little bit. Looks like we popped up and now we're pulling back. So I want to see what's going on here. We're not out of the woods yet as far as potential corrections. The reason being is that the buyers are now all the way down here. We've already had a extended move to the upside. So back from that wiki area, 2-candle flip was around 50.54. And we're already at close to 51.54. So then that should tell you we're about 100 points higher from where the buyers initially started pushing price up. So going long is going to be a little bit more elevated risk. Let's come down to a 1 hour, see what's going on. All right, so on the S&P, have our 2-candle flip on a 4-hour time frame. This was the cleanest picture I could see was on the 4-hour across the board on all the equity indexes, where we had the red candle followed by the green candle closing within the range of the red candle. Huge move to the upside. So entry to go long is going to be at 5107.5. Stop at 5098.75. We've broken out to the upside. Let's see. A little bit of a wiki area up here. We're still kind of holding this resistance. The trend is still up. Let's see if we can get some more detail by going down to the smaller time frames. 1 hour time frame. And we're hanging out in resistance, which is our wiki area over here. Popped just above it a little bit. Let's go down to a 10-minute. All right, so this looks like a rally, correction, potential next breakout to the upside. Use the wiki area to your advantage. Look to see where the buyers are coming in when you identify the wiki areas, and that will help you stay trading in the direction of trend. So on the 10-minute, we can see this wiki area down here. Coming down to a 1-minute time frame. Extend that wiki area to the left. So trend is to the upside. I'm going to be looking for long trade opportunities. Instead of going long up here, because the wiki area is down here, I'd rather wait for a pullback first. Price coming back down to our wiki area to then look for our long trade opportunity. Again, keep in mind that we want to get in on these trades ahead of time. The best trade entry was getting in on this wick over wick continuation when we broke out to the upside. And we had our wiki area, 2-candle flip, move to the upside, looking to stay with the trend, would have been looking to go long above 51.13. Now that we're already up at 51.54, it's going to be a little bit more elevated risk getting long now after the move has already really been underway. And since we're up about 1.25% now. So keep that in mind. S&P is just going to be a little bit trickier to get into because we've already had a pretty extensive move. We do get a pullback though. I'll be looking to go long in and around the wiki area. Best trade opportunity is if we get a breakdown of support, 2-candle flip, fake out, breakout to then go long. At this point, just wanting to be a little bit cautious. I do want to get a pullback first to get a better entry point. Otherwise, if we were going long now at 51.55, our stop would be down at 51.40. 15 points worth of risk is outside of my risk management, and I'd rather look to go long on a pullback versus on a breakout. So we'll keep an eye on S&P. See, IBM popped up, Goldman Sachs popped up as well. S&P's pulling back a little bit. So there's going to be a little bit of a shuffle based off of the employment situation report that came out, and a little bit more volatility. Take a look at the other equity indexes, see if there's anything there. Yeah, so similar picture across the board on all these equity indexes. When price dropped, came down right into our wiki area. To the left, odds enhancer, we've got a 2-candle flip over here. So all of this is saying, hey, look to go long. The trend is moving to the upside. Trying to break above this resistance over here. You can see we have resistance, resistance. We're in and out. So we're going to be looking for that breakout and pop to the upside once we break above 17,988. Let's see, coming down to the 1 hour. Our 2-candle flip zone is going to be a little bit further away. Down here in the spacing from the overnight session, our zone is going to be down at 17,761.25. Stop at 17,720.75. Again, right now we're kind of in no man's land as far as the NASDAQ. It's going to be riskier going along here. Again, we may get a breakout to the upside. You just want to be careful that if we do get that breakout up, if it starts pulling back, that may be our reversal back down. Let's come down to a 10-minute. It looks like we're coming back down. We're still holding our resistance. 1-minute time frame. Coming down into our wiki area here. So at this point, still looking to go long on the next breakout to the upside. So you can see the buyers are in control. So we're not looking to pick a top just yet if you still see that upward momentum. Let me go out to a 5-minute. Okay, 4-minute. Yeah, so in order to go long, I would just want confirmation that we're getting that breakout to the upside. I would look to go long above this resistance. If we can break above 17,968, that should be the next short squeeze to the upside. What a short squeeze is when a lot of people are trying to pick the tops and then they get squeezed out because all the shorts need to cover their positions as price moves higher. So that would likely happen above 17,968. Do another check, 3-minute. Go long above there, and then I would also go short below our wiki area if we can break down below that support, below 17,900.25. Okay. In the meanwhile, nothing to do. We're just basing from much of the session this morning. Let's go out to the Russell. As you're seeing, it's trickier now jumping into the markets because we already missed the wick over wick continuation to the upside from the 2-candle flip. So now trying to jump in on a trade is going to be trickier because we don't have the setup that we had from the futures market open. So we'll keep looking, see if anything else is setting up. Russell, again, our spotlight trade, mapping that one out where we had resistance, up above, a wick over wick reversal, 2-candle flip in a wicky area, momentum move to the upside. So now at this point, looking to go long, we'd be wanting to ideally wait for a pullback down to 2023.7, because that's where our 2-candle flip zone is located. At this point, rallying. Want to be a little bit careful because of where price is rallying into. When we have a support level, price bounces and then breaks down. What do we call that last bounce before the breakdown? If we have a support where price has been holding for many times, we get that last bounce and then a breakdown through support. What do we call that pivot point just before the breakdown? Good job, Dwayne. I like Jeff's response to, good job, Demetrios. Yeah, that's that exhaustion move, that last attempt at a rally before breaking down, but that's what we call the controlling breakout pivot. So how these are helpful? Controlling breakout pivot, or CBP, as you see students mentioning, that is that last bounce before the breakdown. When you can find that, that can give you an idea as far as where the sellers are holding their positions. Notice how price dipped into that controlling breakout pivot, and now we're pulling back. So we want to be careful going long at this point because we just rallied into a controlling breakout pivot. Keep that in mind as we go down in time frame. 1 hour and pulling back. 10-minute time frame. It's looking pretty wicky up here. Let's see if we can find a short entry. 5-minute. Right now we've got a 2-candle flip here, which is why price stopped here and dropped. So if we can get price to push back up to 2064.2 to 2068.9, that's where we've got our 2-candle flip to the left. We'll be looking for our short trades at that point. Price did test it once, so we'll see if price can go back into that zone for a second attempt. I just want to see 2-minute. Yeah, so still the same thing. This is where the sellers are located. Getting a pop-up into it, we'll look for that momentum move back to the downside. 1-minute time frame. Same picture. You can see all these wicks over here. Just a lot of selling pressure pushing price down. Till then, no real way to jump in short. I want to see more of a rally first to then take the breakdown. Let's see. And lastly, the Dow daily time frame. Again, wick over wick continuation move to the upside. So the shorts are just being squeezed out of the markets as we're up 1.3%. And all of that started with the 2-candle flip down here. 2-candle flip in a wicky area. These are the signs that are telling you to look to go long. But now being up 1.3% already, it gets a little bit trickier trying to jump in because we've already missed a lot of the move. So that's where it might be a little trickier today, but let's see. 10-minute time frame. A lot of buying pressure here. 3-minute time frame. But also a very strong wicky area up here. Notice how price is trying to rally, but it does keep getting rejected time and time again. Price is trying to rally, sellers are coming in, price is trying to rally, sellers are coming in. I also would want to be careful that we may possibly get more of a correction move back down if we can't break above this resistance. But overall, we're stuck within this range that we've been in for the past hour, just up, down, up, down. A lot of times this happens if we've already missed the origin of a big move, which happened once the report came out and we got that spike up. Second, equity indexes are going to be a little bit trickier. When this happens and you've already missed some of the moves, that's where I like to look at some other products to see what's going on and how we can get into a trade setup. Let's take a look at crude oil. If you guys are looking at anything else, feel free to let me know in the chat. Crude oil, daily time frame, had our huge move to the downside. We're basing a little bit. We're getting close to a 2-candle flip down here. Notice we have a 2-candle flip, and that's been acting as support for many times. So price coming back down, we may actually see some buying coming in as price gets closer to 78.03. In the meanwhile, sellers are still in control, pushing price down. How we know that is because of these top wicks showing the selling pressure. Let's break it down to a 1 hour. Selling pressure still in control. So as price is rallying, we should be looking for our short entries as long as this wiki area holds. Let's drop down to a 10-minute. Okay, so we're bouncing off support down here. Again, a lot of these products are really choppy today. That is going to be adhered to the FOMC announcement, the employment situation report that came out today. But for a trade opportunity, let's come down to a 5-minute. I mean, right now we're in support, which is where the buyers are located. Ideally, I'd be wanting to go long as price comes into this support. You can see we already had that 2-candle flip down at 78.74. Let's see, let's come down to a 2-minute. Let's try 1 minute. We rallied, we're pulling back. We've got a 2-candle flip on the 1-minute time frame up a little bit higher. Yeah, not really a good setup as at this point. Just because we're not seeing the 2-candle flip above resistance or below support. The nearest one above resistance is going to be this one over here that we have marked. We're still kind of far away from it. Price coming back down to support, we could look to get long. Possibly, I would say if price breaks below this support in our green box, we can look for the flip back to the upside. Let's zoom out to the 15-minute. Yeah, so this is our support level. If price breaks down below here, I would say look for the 2-candle flip back to the upside, and that's going to be our fake out breakout situation. Right now, nothing really to do since we're just in between resistance and we're in between support. Let's keep looking around. And some of these setups are pretty choppy at this point because we've either missed the move or price just isn't where we're looking yet. So back to the daily chart on crude oil. If this is going to continue breaking to the downside, and we could look to take a shot at that short trade break. Once we get that breakout to the downside, we just want to identify our 2-candle flip prior so that we can manage our risk. Let me come back down to a 10-minute and just see if one is forming. Hmm. 5-minute. Three-minute. All right, there we go. So 3-minute time frame, we've got our 2-candle flip here. So if we are going to take the breakout to the downside, our entry would be below 78.45 with our stop above the 2-candle flip, which is 78.97. You can see our 2-candle flip's pretty far away from our breakout point. If that's the case, I would say looking for the micro contracts to trade or waiting for price to pull back and do a zone entry at 78.75, stop at 78.97, just so you can manage your risk a little bit more closely. Let's take a look at gold. Daily time frame. All right, gold is getting our breakdown. This one I'm going to look to go short on gold. I was kind of waiting for this in the overnight session. Notice how we have our support here. Tested it. We rallied up, formed a 2-candle flip on the daily chart. That's saying look to go short to trade this momentum to the downside as we start to break below this support. We've just begun trying to break below it. We just need to get a little bit more momentum. So I'd say again, gold setting up for the short trade as we're breaking out to the downside. Coming down to the 1 hour. Looking for our 2-candle flip. Let's try a 10-minute. There we go. All right, so on gold, our 2-candle flip is going to be located on the 10-minute time frame. Green and red candle. 2-candle flip there. Entry 2312.5. Stop at 2317.5. 2-candle flip. Again, 2312.5, stop at 2317.5. This is one we can set up a trade on now. Why I also like it is because we can see a lot of these wicks in this 2-candle flip, showing that it's very much a wicky area pushing price down. So price rallying back up into it, looking for our short trade, basing on the daily time frame. Momentum moves to the downside, which again, we had our 2-candle flip yesterday. So today we're looking for the buyers to become exhausted and looking for that next push to the downside. So we'll see if we can get that. Again, let me set up that order. What contract is gold trading? Thank you, Mark. 15-minute. Let's set up this one since we are getting a little bit of a rally. Sell custom with stop. Our entry is going to be at 2312.5. And then our buy stop to manage our risk is going to be 2317.5. Confirm and send, sell limit 2312.5, stop at 2317.5. That's going to be our 2-candle flip. I think on the 5-minute. Yeah, right in there where we have our green and then red candle flip. That's our 2-candle flip. So order is set out there. If we do get a push to the upside, looking to go short in our 2-candle flip zone. You want to kind of understand what's going on now too, and how price is moving higher, is that we did form a 2-candle flip here. So price is rallying, pulling back to that 2-candle flip, rallying. So we can look to trade it long to the opposing zone. That's going to be more of the day trading style. If you're going to be doing that, you just want to be able to understand how price is moving higher and why. Typically, it starts with a 2-candle flip. We get a breakout, price comes back down to the 2-candle flip, continues to move higher. In this case, we could look to go long up until price reaches our opposing zone. In that case, entry to go long would be down at our 2-candle flip. Or if we get another pullback, fake out, breakout, then we can look to take it long again. We'll keep an eye on both things. Entry to go long is going to be down at 29 or 2292.5. Stop at 2289.3. Okay. Hey, Jeremy, good to see you. Will there be a recording of this we would be able to access? Yes, so I'll be posting that on YouTube after today's session. Go back to it, look at everything that I'm discussing, kind of understanding the market conditions. Yeah, and absolutely you can save the video, go back, watch whenever you want. It will be a public video, so feel free to save it or download it if you want. Absolutely. All right, so gold, I'm gonna wait for a little bit of a pullback. That would be a nice way to enter, to go long until price reaches our opposing 2-candle flip. So let's see. And no entry yet. I'm not looking to jump in. Those pullbacks really are the best opportunity to get in. Because if I was looking to go long above this high, 2301, then you want to place your stop below that low wick of 2295, which may be a little bit too much risk. For me, breakout trades in this case are a little bit trickier. I like to wait for that pullback first to get in at a better entry point. Okay. I'll set up the order to go long as well. Let's do buy custom with stop. Entry to go long is 2292.5 with our stop at 2289.3. Confirm and send. Now we have 2 orders set up. This one is going to be a shorter term trade, trading with the trend to the upside at this point. However, if we reach our opposing sell zone, then at that point, the trend may be starting to shift back down, and then I'll look to cancel this order. Really, whatever triggers first will give us a better indication of trend and where the markets are going. Keep in mind that's from our prep screen, our trading tip of the day. 2-candle flip is going to be used to anticipate the breakout trades, zone entries, and trend direction. So right now the trend is up because the 2-candle flips are showing upward momentum until we reach our opposing zone at 2312.5. We'll look at some other products. See copper. Copper is one that Mark and I were watching for a couple days, kind of taking it back and forth based on the daily setups. Do want you to notice the setup that's happening now. So we have a 2-candle flip down here that led to this upward momentum move. Now as price is pulling back, notice how we're starting to drop into, or actually have already, we extend that 2-candle flip from wick to wick, we're already dipping into this lower 2-candle flip. Now you can tell me on copper, are we in an uptrend or are we in a downtrend? You guys think this is a daily chart, copper? Are we in an uptrend, downtrend, or a sideways trend? Higher time frame. Yeah. So if we're in an uptrend, good job, Risa, Jeremy. If we're in an uptrend, then that means looking for a pullback would be our opportunity to go long, just as how all these other pullbacks were opportunities to go long before the next momentum waves to the upside. So keep that in mind. Our daily setup is looking like it could be 2-candle flip, in which case we're going to be looking to go long as price breaks out. Let's see, let's drop down to a 12-hour. That 2-candle flip, if we want to give it a little bit more detail, is that 2-candle flip located below support? What do we think is located below support level? If we look left, we can see price stopped here once, twice, 3 times. Nice job, Patrick. Yeah, so let's mark that. Got our support, breakdown. Even the 12 hours showing a 2-candle flip. And we're starting to break through that. So if the trend is going to continue to the upside, this would be the opportunity to go long as price starts to squeeze to the upside and get the next wave higher. So I'm sure a lot of people are trying to pick tops right in this pivot point, but they're missing all of that information leading up to this move up, in that we have a support, a breakdown, and then a 2-candle flip. So let's see if we can find a long setup on copper. 4-hour time frame. As you go down in time frame, you'll start to notice all the pieces kind of fitting together nicely. Now we have support, breakdown. If I expand this, right after that breakdown, we've got our 2-candle flip here. Price rallied, pulled back into it, rallied. We've got another 2-candle flip here as well. Red and green. Price is rallying. So you just want to stay with the trend, look for the next 2-candle flip. We've got a red candle, but we're missing the green. And then that would give us our next trade to the upside. If you want to start going down to the smaller time frames, you can. Let's see if we have it on the 1 hour or smaller. Let's see. Not yet, but we are getting ready for that breakout because we're making higher highs and higher lows. Let's come down to a 15-minute. A little bit of support in here. Let's mark that. Couple bottom wicks there. Price came down, 2-candle flip. So we're getting closer. Come down to a 5-minute. All right, we're getting that push up. If we're going to take that breakout trade, we'd be getting in now. That was a quick pop up with our stop placement below 4.5379. Let's see. I'm going to wait for a little bit more confirmation. Notice how we broke out a little bit and we're pulling back. My confirmation is if we can clear that resistance, and then I'll place my stop in the spacing area. Sometimes you get that pop up if you want to kind of work around it, let it break out and then wait for the pullback to get more confirmation that the move is going to continue. So breaking above that, 4.5655, buy custom with stop to take a breakout trade above those high wicks. Again, 4.5655. Going to be a buy stop order. With our sell stop, I like to manage my risk is just using some of the more recent lower wicks to show me where the buyers are pushing price up. I'm going to place my stop below this low wick here on the green candle, showing that there's a decent amount of buyers at this point. Place my stop for right now at 4.5455. 4.5455, confirm and send. So again, buy stop, confirmation breakout trade once we break above this resistance. Sell stop, which I will adjust once we start to get more momentum based on the low wick that ends up holding, which might be this one. Let's send that out there. Again, if you find that breakout trades are trickier and sometimes in your trading is getting in on the breakout a little bit too soon and it breaks out and then pulls back, what I would say is let it break out and then wait for the pullback to get more confirmation of that momentum move if you're kind of missing it the first time. Julius, you got the Russell. Let's jump out to that and then we'll keep an eye on our copper trade to see if we can get a little bit more momentum there. Russell. On gold triggered as well. Let's jump out to that one too. Wow, look at that. Good job, Julius. See that wiki area? Right into it. Oh man. All right, so Russell's moving down. We're getting some pretty decent selling pressure, indicating we may see more of a correction first. In this case, looking for a re-entry. Notice that wick area is still holding and pulling back, is waiting for the next 2 candle flip. Come out to a 15-minute time frame. Yeah, it's a lot of selling pressure. Let's see if we can get in 5-minute time frame. Again, similar to the copper trade, just letting price break down a little bit, wait for that pullback, and then getting in with a confirmation possible wick over wick continuation pattern, which would be nice. Which would be looking for the breakdown below some of these low wicks. Below 2053. Let me just see the 1 minute for a moment. All right, so breaking down, if you want to get in short, it would be on the breakout that's kind of underway at this point, and then placing our stop above the high wick of our green candle. Just since I'm already kind of missing that one, I'm going to go back to copper, and then we'll take a look at gold. Oh, wow. How come I didn't? Did you get the gold trade, Rusa? Jeez. Look at that. And it looks like it went into the zone. Well, it popped up. Did it trigger anyone's order? Looks like it missed me. What a bummer though, just tapped it right back down. And this is why it's good to identify both sides of the trade and where your opposing zones are at. Again, it missed me. I'm kind of surprised because it looks like it went in, but it was a fast move. Now that we've tapped it and we're starting to pull back, that's where this long trade here is going to be a little bit trickier because as we start to pull back, notice the selling pressure coming in. I'm going to be looking for possibly a breakdown. I'm going to take off my long trade order. Remember, we have a bearish bias on gold, which is why we were looking for the short trade. The long trade was just a short-term setup. Oh, you too, Patrick? Yeah, maybe it just missed us by a tick or so. PMI number, May prices wick up. Yeah, that's right, it is. Yeah, PMI composite final, that was 9:45. ISM services, that's right, the 10 o'clock reversal time. Yeah, those economic reports will do that. Spike up, right back down. And I'm going to be looking for the short trades because as we're getting ready for that breakdown, we want to anticipate that all the people trying to buy here are going to get stopped out as we start to see that selling pressure kick in. Breakout trade entry is going to be below this support. like right in here is where the buyers are holding price up. Let's see, looking to go short below the support level and be down at 22.96. Then a uptrend, but selling signal that came back to the breakout before the pivot. Absolutely. Yeah, that was that last bounce before the breakdown. So our controlling breakout pivot. 1 hour time frame. In that huge wiki area up here. Tapped it, pulling back. So if we are going to see continued selling pressure, we're going to want to see it clear that lower support. Five-minute. Yeah, so we're waiting for right now. You can see the wicks are pretty extreme on the top side. I'm going to set up a short trade entry on a 2-minute. Okay, so that breakdown again, short entry. I want to make sure that we're getting more confirmation of a breakdown. So how this red candle dropped and then rallied really quickly, that drop is showing us where our support level is, which is this basing area in here. Going to be down at 2295.9. So breaking below that, going to look to stay in that reversal move longer. And then that 2-candle flip, we're going to want to take that off because the trend would be shifting at that point, which is what we're seeing now. So we'll keep an eye on that one. Again, so close. I'll leave my order out there in case it does go deeper into that 2-candle flip up here, and then look to take it back to the downside. Already gone crazy how fast time flies. I do want to show you guys, so had an announcement from a couple days ago, just going over some of the May specials. If you're not already part of the live trading room, going to be doing that complimentary on Fridays moving forward for new students. That link will be available on the website. But more than that, May $99 live trading room special for new students, regularly $125, but just for the first month only, and again for new subscribers. So if you're completely new and not part of the live trading room, you would be able to get that by going to katetrades.com. Also, Trade with Kate in the live market's going to be coming up on May 13th, 14th, and 15th, doing this 3-day event a little bit differently. This is going to be the one you don't want to miss because we're going to be doing most of the live trading in the live markets from 8:30 to 11 a.m. Eastern. So even if you've been in some of the other classes, this is going to be the first one where we're putting all the pieces together and really implementing all the strategies that we've learned in the live markets. Giving you guys plenty of time to do that on May 13th, 14th, and 15th to implement your strategies and answer your questions to see what you're doing right and where you may need some tweaking. And then also doing a couple specials on one-on-one coaching. Haven't done them in a while, so wanted to bring that back as we jump off and jump into our May month. 1 session, 3 session, 5 sessions. All the specials are going to be available on my website, katetrades.com. Let me show you because I've done a little bit of updates to the website if you've noticed. katetrades.com. So to see all of the specials, I've included on one tab next to the homepage. Click on the May Specials tab at the top. Everything that you need to know is going to be located here. For the live trading room for the month of May for $99 for new subscribers, it's going to be here. The 3-day live event, again, the best event yet, just because we're going to be implementing all the strategies in the live markets, May 13th, 14th, and 15th. And then the one-on-one coaching sessions, if you want to register those and you feel like those one-on-one sessions are more beneficial to you, feel free to lock in some of these discounts. There's no expiration date on them and you can use them moving forward. And then I would say the 3-day event coming up, Trade with Kate in the live markets, also register for that one on the website. Everyone here for being part of today's complimentary session, you will get the discounted link even from this one. So on the website, it's $395. Everyone in the room today is going to get it for $349. Let me grab that link. and I'll post it in the chat. And that price isn't going to be anywhere else just because it's special to everyone that joins these sessions. Let me see if I can grab it. All right. So trade with Kate in the live markets. Again, that's going to be May 13th, 14th, and 15th, 8:30 to 11 a.m. Eastern. The discounted special offer for $349 is going to be the one in the chat. So click that one. Don't use the link on the website since that's going to be for everyone else. Great session today. Great job following everyone as far as everything going on, and a lot of May specials. If you're still struggling with trading and you feel that you're missing some of those pieces, come join one of these events or do one-on-one coaching to get an idea of how I can help you put those pieces together. Staying in the community and keeping an eye on the markets, day in and day out, is going to elevate your learning and take you to where you want to be that much faster. So I'm looking forward to a jam-packed month of May with you all. Again, putting all these pieces together. You can see gold now starting to get that pullback. We'll be looking for our next short trade below 2295.8. Let's see, anything else? Copper pulling back. We had our entry to go long, but you can see we're still trying to find enough buy orders to take us to the upside. Until we start to see that shift, you want to just kind of remain on the sidelines until we start to get those breakouts. And then as far as the equity indexes, Dow is pulling back. Let's see, S&P pulling back as well. Finding those controlling breakout pivots is key as well. Oh, let's take a look at platinum. Thanks, Mark. Platinum daily time frame. Oh, look at, I was waiting for the setup yesterday. Actually, I'm glad you caught this one, Mark. So I'm seeing the rally. We're getting pretty high up. What is going on? How many people are going to be buying at this point? Versus, is this the start of our reversal? Resistance, pop above, pull back. As the markets pull back, this is where we want to be getting in short to stay with this reversal to the downside. So we've already broken that resistance. That's step one. Step two, waiting for the pullback. Now we just need to find our entry point. 15-minute time frame. We've got a 2-candle flip up here. Are you in on platinum, Mark, already? Surprised I forgot about that one. And then also getting the breakdown here. All right, so we're about to break that support. If we can get one more bounce, look to take the breakdown based on the daily 2-candle flip that we're seeing and this pullback. 1-minute time frame, we've got a 2-candle flip down here, going a little bit faster just because it is setting up. We've got one right there. Nice job, Mark. 2-candle flip here. All right. My entry is going to be at 962.1. Stop at 963.6. Trading with this momentum to the downside. Again, we don't want to be picking bottoms. Once you see that 2-candle flip, you want to start looking for that shift to the downside. I've already gone over a little bit. Thank you all so much for being here. If you have any questions at all, feel free to reach out to me at tradingcoach@katetrades.com. The link to register for all of the May specials are going to be located in the chat. You can click that one page to get all of the discounted rates, except for the 3-day event. Again, for everyone in the room, you get it for the $349. That's going to be the separate link in the chat. Thank you, Michael, for being here, and thank you, everyone else. Have a great weekend. Stay on top of your daily timeframes and up. That is going to help you stack the odds in your favor tremendously with your trade opportunities. Once you learn how to read a daily chart, your day trades are going to be that much easier. Thank you all for being here. Have an amazing weekend. Thank you, Patrick. Thanks, James. And I'll see you guys all next week on Monday for another live trading session. Have a great day, everyone. Bye-bye.